Hey soldiers, Wells Fargo might owe you some money. They are out here once again acting like a criminal enterprise. Every 12 to 18 months, they are in the news for defrauding their own customers. And here they are at it once again. Wells Fargo has been ordered to pay $3.7 billion by the Consumer Financial Protection Bureau for a variety of illegal activity, including wrongfully foreclosing on homes, illegally repossessing vehicles, incorrectly assessing fees and interest, and charging surprise overdraft fees. This activity affected more than 16 million consumer accounts. This bank has a serious culture problem that is systemic because this type of thing keeps on happening at Wells Fargo. And it is downright deplorable that a major bank, they are one of the largest banks in the world, let alone the United States of America. And they obviously don't care about their customers. There goes the Wells Fargo endorsement, and fine, I don't want it. Because again, these guys, if it were, a street thug stealing your money, of course, he or she would have to go to jail for that. That's what we'd want to see if they violated your rights and took your property. Somebody at this bank needs to be identified as the one that is responsible for this rotten culture that they have. The fine that they've been charged consists of more than $2 billion in redress directly to customers and a $1.7 billion civil penalty. So look, if you are or have been a Wells Fargo client, you might want to look into this. Wells Fargo's rinse-repeat cycle of violating the law has harmed millions of American families. This, according to the CFPB's director, Rohit Chopra. The CFPB is ordering Wells Fargo to return billions of dollars to consumers across the country. This is an important initial step for accountability and long-term reform of this repeat offender. Listen, you can get your money back, but if you've been foreclosed, you had your car repossessed. Imagine if you weren't able to get to work because your car was repossessed. We just talked about car repossessions being on the rise here in the country. I'll link to that video later on in this one. We just spoke about that. But suppose you're doing everything you are supposed to be doing and you walk outside one morning and your car is not there because Wells Fargo wrongfully repossessed it. I can imagine the stress. I can only imagine the stress of having your home foreclosed. Now compound that by having that foreclosure done wrongfully. That kind of thing can break up families, okay? That can destroy lives. But apparently Wells Fargo doesn't really care about that. All right, according to today's enforcement action, Wells Fargo harmed millions of consumers over a period of several years with violations across many of the bank's largest product lines. The CFPB's specific findings include that Wells Fargo unlawfully repossessed vehicles and bungled borrower accounts. Wells Fargo had a systematic failure in its servicing of automobile loans that resulted in $1.3 billion in harm across more than 11 million accounts. The CFPB is ordering Wells Fargo to return billions of dollars to consumers across the country. This is an important initial step for accountability and long-term reform of this repeat offender. According to today's enforcement action, Wells Fargo harmed millions of consumers over a period of several years. The violations occurred across many of the bank's largest product lines. The CFPB's specific findings include that Wells Fargo unlawfully repossessed vehicles and bungled borrower accounts. Wells Fargo had systematic failures in its servicing of automobile loans that resulted in $1.3 billion in harm across more than 11 million accounts. The bank incorrectly applied borrowers' payments, improperly charged fees and interest, and wrongfully repossessed borrowers' vehicles. In addition, the bank failed to ensure that borrowers received a refund for certain fees on add-on products when a loan ended early. So even if you were someone who, paid that car off early and thereby didn't pay Wells Fargo as much interest as they had expected, they still got you by charging fees surreptitiously and outside of the process, aka illegally. They also improperly denied mortgage modifications. During at least a 7-year period, the bank improperly denied thousands of mortgage loan modifications, which in some cases led to Wells Fargo customers losing their homes to wrongful foreclosure. The bank was aware of the problem for years before it ultimately addressed the issue. They illegally charged surprise overdraft fees. Surprise! For years, Wells Fargo unfairly charged surprise overdraft fees. Fees charged even though consumers had enough money in their account to cover the transaction at the time the bank authorized it. And this was done on debit card transactions and ATM withdrawals. As early as 2015, the CFPB, as well as other federal regulators, including the Federal Reserve, began cautioning financial institutions against this practice known as authorized positive fees. So look, we talk about these banks all the time and how one of the main way they make money is to take in your savings and checking, pay you little to no interest, depending on what product you have, and then turn right back around and charge at least 16% on credit card, up to 24%, okay? 7% on a home loan, 6% on a car loan, okay? And in addition, they are all, Wells Fargo at least, is also saying that's not enough. They're acting like Sam Bankman-Fried, okay, and saying that's just not enough for us to do it legally. We also got to go and get more money by charging our clients illegal fees. They also unlawfully froze consumer accounts and misrepresented fee waivers. The bank froze more than 1 million consumer accounts based on a faulty automated filter's determination that there may have been a fraudulent deposit, even when it could have taken other actions that would not have harmed consumers. Customers affected by these account freezes were unable to access any of their money in accounts at the bank for an average of at least 2 weeks. The bank also made deceptive claims as to the availability of waivers for a monthly service fee. Listen, can you imagine being unable to access your bank account for 2 weeks, where you use that debit card to put gas in your car, buy groceries? You might want to buy the kids something from, Mickey D's. I don't know. It's your money and you don't have access to it because they can't get their stuff straight. Wells Fargo is a repeat offender. I repeat, Wells Fargo is a repeat offender that has been the subject of multiple enforcement actions by the CFPB and other regulators for violations across its lines of business, including faulty student loan servicing, mortgage kickbacks, fake accounts, and harmful auto loan practices. Now, the CFPB, what are they going to do about it? Again, that stands for the Consumer Financial Protection Board. They have the authority to take action against institutions violating financial laws, including by engaging in unfair, deceptive, or abusive acts or practices. The CFPB's investigation found that Wells Fargo violated the Act's prohibition on unfair and deceptive acts and practices. All right, so they have pretty much forced them to kick out the $2 billion in redress to consumers. So you may be entitled to some of that money. I hate to sound like one of those lawyers on television. If you drink Cap Lejeune water, call this number. Wells Fargo will be required to pay redress totaling more than $2 billion to harm consumers. These payments represent refunds of wrongful fees and other charges and compensation for a variety of harms, such as frozen bank accounts, illegally repossessed vehicles, and wrongly foreclosed homes. You can't get your family back, right? You can't get that job back that you missed because you came outside and your car wasn't there. Specifically, Wells Fargo will have to pay more than $1.3 billion in consumer redress for affected auto lending accounts, more than $500 million in consumer redress for affected deposit accounts, including $205 million for illegal surprise overdraft fees, nearly $200 million in consumer redress for effective mortgage servicing accounts. They got to stop charging the surprise overdraft fees. Wells Fargo may not charge overdraft fees for deposit accounts when the consumer has available funds at the time of purchase. That seems just obvious. Or other debit transaction, but then subsequently had a negative balance once the transaction settled. Surprise overdraft fees have been a recurring issue for consumers who can neither reasonably anticipate nor take steps to afford them. And some people say we don't need regulation. We don't need all of the regulation we have, because if you look at the Code of Federal Regulation, you will soon find out that if you get out of bed in the morning, by the time you do that and put on your slippers, you have probably committed like 5 felonies. But this banking regulation isn't even working against Wells Fargo. Back when they did the fake account scandal, you thought they would have stopped. They got a lot of bad exposure from that. They were hauled up in front of Congress. The CEO had to step down and the new one was brought in. But hey, again, it's cultural. It's embedded in the culture of the bank. They have to ensure auto loan borrowers receive refunds for certain add-on fees. Wells Fargo must ensure that the unused portion of gap contracts, a type of debt cancellation contract that covers the remaining amount of a borrower's auto loan in the case of a major accident or theft, is refunded to the borrower when a loan is paid off or otherwise terminates early. Okay, and then finally, get this. They have to pay $1.7 billion in penalties to the CFPB, which will be deposited into the CFPB's Victims Relief Fund, which is a slush fund for the United States government. What they should have to do is kick that 1.7 out as a kind of punitive penalty to these people who are entitled to the first $2 billion. But, the government, look at this. They kicked out $2 billion to the people that were harmed and pretty much $2 billion to the government. So one for you and one for me, even though I wasn't harmed. They should go ahead and kick that remaining 1.7 out to the folk that were directly affected and show these banks how they've got to, what potentially could happen to them in the event that they run afoul of, the law and start acting more like a criminal enterprise than a bank. So I don't know. Let's wait 18 months. Wells Fargo is going to do something else. It's almost a guarantee. But if you are a customer of Wells Fargo, hey, take a look at, call them up and say, hey, you need to prove you didn't do this to me. I don't need to prove that you did. I want some of that money. Act like they do. All right, speaking of banks, Bank of America sees an unemployment wave coming in 2023. That's why you need all of your money. You don't need Wells Fargo stealing your money. You need it because another bank, Bank of America, says we're about to get hit with an incredible wave of unemployment. And there's also a question as to whether or not the unemployment numbers we've been getting can even be relied on. 2 videos, guys. Check them out. I will talk to you soon.